Okay, we should be live and everything should be working today. So if everybody can hear me and see me clearly, do me a favor and drop something in the chat. Drop an emoji in the chat, drop a number in the chat, 1, 2s, 3s, whatever you guys prefer. But I just want to make sure you guys can see me and hear me good, and that the connection is good, and that we're not lagging or anything like that. And if we're good to go, then we'll go ahead and get started. I'm expecting a few people to hop on here a little bit late, but nice, so cool. So let me do this. But yeah, I'm expecting a couple people to hop on here late, some newer students. So I'm gonna get into it at the same time though. But same thing as always. The point of these calls are to just answer questions, go over comments, go over concerns, that kind of stuff, and make sure that you guys as traders are equipped for the remainder of the next week. We were supposed to do this call yesterday, but I did have some technical difficulties, and I don't know what was going on. It was just something was going on with OBS to begin with, which is what I use to stream, and then something happened with Zoom, and then my whole computer just started messing up, so it was just, better to just do it today, right? But, so what we're gonna do is, depending on how many people get on here right now, I think it might just, let me refresh the chat, because it just said 3 people were on, but I think it might just be Cam. And if it is just you, bro, one, I owe you an apology, bro, for not calling you. It says that there's more people on here, so I'm gonna take back what I was just saying. But I'm gonna finish what I was just saying to you. Is that I owe you an apology, bro, because I've been supposed to have called you weeks ago already, just to go over general progress report, but and everything of that nature too. And then we had to talk about brokers, progress report, what you're doing with your transition to futures, and a bunch of other stuff. So I've been super busy, bro. I'm not even gonna lie to you. We're doing a major transition when it comes to the inner aspects of cash flow, when it comes to the curriculum, the Discord, and just a lot of the other updates that I've been talking about for the entire past year. We're kind of in the end phase of it now. So now we're actually making the transition to the new ecosystem. So it's taking a little bit longer than I thought it would. So I appreciate your patience, bro. And I'm going to write it down right now, actually. I'm going to write it down right here. On my to-do list is to call Cam. I'll text you first to see when you're free. But call Cam ASAP. But I hope you've been good, bro. And I've been seeing you killing it in the chat, so I'm glad knowing that you're doing good. But so to get back into today's topic, so what we're going to be going over today, as always, is what happened this week in the markets. I didn't really send out that many trades this week because I was a little bit under the weather. But I think I sent a trade out Monday or Tuesday, and then I sent out my I think I sent out a trade yesterday. If not, then it was it was a trade on Monday or Tuesday, and then a trade today. And that was it. So we had 2 wins and 1 loss. 1 loss this morning, 1 win afterwards today, and then the 1 win on Monday or Tuesday. But it was a good week still overall. We were still able to get a decent amount of pips, more than 50 pips, which is definitely good. And we were able to come out of the week with profits, right? That's what matters at the end of the day. So my goal for today's call is to go over the trades that we took, also cover a little bit of the updates with what's been going on with the economy in regards to, tariff world and all of that. But the main thing that I want, and then I'm going to start kind of giving some updates about what you guys can expect for the updated experience with Cashflow, but I don't want to go too in-depth into it yet. Main reason being is, 1, there's not enough people on the call, and I don't want to have to repeat it to too many people. And 2, is it's not done yet. So I want to make sure that everything's done. That way, it's value for you guys. But, and it makes sense for you guys, more importantly. So the main thing I want to cover is just trades that we took. I want to cover economic data as well. And the last thing I want to cover, I'll touch into updates, like I said, a little bit. A couple big things that a couple of people have asked me about already in this last couple weeks. And then lastly, and most importantly, answer questions, comments, and concerns that you guys might have as traders. That way we can all make sure that we're all making money together, right? Because if there is 200 plus students in Cashflow, and right now They all, the thing is that, and the people that watch this stuff too, this is what always gets me too, is people watch these live streams later, or they'll get on or they'll see the trades late or whatever. So a lot of people are trading. So I'd say at least half of them are at least actively trading right now, but not all of you guys are actively making money right now. And that's the problem, right? And making money in the sense, not necessarily you always have to be making withdrawals, but in the sense that you're growing your account month over month, week over week, month over month, where it's just the average growth of your account is steady and the number in your account is steadily going up as well, right? So even if you're not winning every single trade, shout out to the people that are, but even if you're not winning every single trade as of right now, you could still be getting a positive return on your trades and on your investment if you're actually showing up and you're plugging in and you're trading, right? So yes, we're going to go over my trades, we're going to go over my strategy, but the main thing that I want to do, again, I'm doing these calls to benefit you guys. So if you're a newer student, or you're a student that isn't in Cashflow and you're just trading on your own, and you want to ask me something, or you want to have me mark up a certain pair, or look at a losing trade that you might have taken, or look at a setup that you want me to look at, whatever the case may be, just ask your questions in the chat. That way you can get the help that you are spending your time and or money to be on these calls for, right? So make sure that you guys take advantage of that, okay? And don't just make me talk to myself, because I'll go over the trades relatively fast, but aside from that, it's going to be more of a, communication basis, you know what I'm saying? So with that being said, let's go ahead and get into the information. I still have a little bit of some phlegm in the throat, so if you hear me, sniddling and snorting, excuse me. But so let's make myself a little tiny over here. Okay, so there we are. Let's bring the desk down a little bit, and then we are good to go. So, I guess the most appropriate place to start would be here, I guess. Yeah, first trade of the week, Monday. Yeah, because we have a lot of stuff to cover, actually. Today was NFP, job data, whole bunch of stuff. So we'll just start here. We'll start on Monday. I didn't do a live stream last week, I don't think. I don't remember, but I'm pretty sure I marked this up. No, I didn't. I just talked about it in the Discord group. So if you're not in the Discord group, then you wouldn't know this, but I send out this markup, I believe, on like Sunday night or something like that. But if you are in the Discord, then just go look back in the chats, and then you'll see exactly when I sent it. But point being is, after following the recent gigantic spike that happened on Euro USD and with the DXY at the beginning of mid-April, right, we had a massive move. And I personally, this is just to kind of recap on where we were from the last time we did a stream, is we were in this somewhat of a continuation pattern, or so I thought it was, right? But so we ended up buying here, trying to ride it up to the top. That was the one trade that we lost. This was, end of April. And then the entire move that we made here was corrected and filled again this past week, right? Or past 2 weeks, okay? So taking that first into consideration, after we had filled the previous, gap, we started getting, higher highs and higher lows. I mean, lower highs and higher lows, meaning that we were in a consolidation pattern, is what I was trying to say, right? So we were inside of a consolidation zone. So first trade of the week, my idea was this, okay? It can either, one, be a bearish continuation pattern and a bearish accumulation where, price is just building up and then it's just going to continue dropping, which is in essence kind of what did end up happening. But what I kind of figured where we could also see it going is just depending on the scenario, since it is symmetrical, there really wasn't a bullish or bearish bias to this market pattern, right? Yes, we are coming into from a downtrend, but again, since it's symmetrical, it could technically go either way. So I was still expecting, I kind of didn't expect there to be good news this fast, good news in regards to, I would say not good news, I would say more calm news. I would say I expected there to be more volatile news this past week as well, and last week as well, that would have caused the dollar to lose more value again. and maybe come back up to where price was before, maybe around like this mid area, right? So that was my idea, okay? And now the way that patterns work, a little secret gem for those of you guys that like to trade with, you know, whether it's double tops, you know, head and shoulders, you know, whatever it is, right, is usually it's in waves, right? But the way that you're going to target your entry, so I was just going like, this is, I'll go in steps, right? So, oops, sorry. We have 1, 2, 3, 4, 5, and then this hadn't broken yet. So then I just figured, okay, well 6, and it still didn't break. So I figured on the next chance, if it broke out, I would ride that trade up, right? And the way that we set the pattern, the way that we set the actual take profit levels for it, because it was a very simple trade. It's just I had just saw the accumulation building up, and whenever we exited the, I don't even know why I have this fib here, because the fib isn't even valid at this point. Oh, no, it was. Yeah, it was. But yeah, so when I just kind of figured whenever we exited out of this actual pattern, that would be an appropriate entry just based off of common knowledge. You know what I mean? You know, some people don't like trading patterns. I'm not a big pattern trader myself either, but if there is a good opportunity to capitalize on it and it makes sense with the other things that I like to use in my system, then 100% I will take it, right? And if it's easy to spot, then why not use it? You know what I mean? So this was very easy to spot, right? So 1, I would enter on the break, potentially enter on the break and retest. And 2, how do we know where to target, right? So first off, typically, right, if you're having a pattern like a triangle like this, you would measure the length from the open of it to the bottom of it, and then that will be your distance for your full move, a potential move, right? So in this case, it's 130 pips, right? So that means that if we were to enter on this trade, which we did, and we entered here, it would ideally go 130 pips. It's not always going to happen that way, especially the bigger it gets. But if you guys look at, and I can show you guys some other examples of this a different day, but if you go look at the previous live streams that I've done, you guys would see, like, if every time we've called out like a head and shoulders, I've talked about this, or if we've called out, it's prominently with head and shoulders, I would say, head and shoulders and like not pennants, but like rising triangles, if that makes sense. Not really symmetrical too much, but just the concept, like the length of the actual beginning of the move is going to be the length of the target for the once it breaks out of that structure. So that was my idea, but I kind of figured, okay, well, I'm not going to be greedy and target 130 pips. So I'm just going to go ahead and target what I think is realistic, which is, again, 45 pips, right? And I put my stop loss at 15 pips, more or less. Now, when did I get in on the actual entry? So initially, I missed it because I wasn't on my computer on Monday. But what ended up happening is it did come back down, and I was lucky enough to be on my computer to where when I missed this initial breakout, I still saw, it was like this. It was like right here. Like, let's say it was right there. I was like, damn, I missed the whole move already that I was just expecting to happen. So what I ended up doing is I just waited to see if there would be a potential chance to get back in or not, right? So I put it right here, put a fib right here. Why did we put a fib here? Because it was an impulsive aggressive break of structure, and that's all you really need, right? If you don't really know how to use fibs too good, go rewatch my previous live streams because I've gone over it extremely in-depth multiple times. And if you are a member of Cashflow, then go watch the Cashflow Fibonacci video where I go over it even more in-depth on how you should use it, right? So I'm actually re-recording that video as well, too, to make it even more updated. But you can still watch it. It's the same information. Okay, so to go back on the topic, so I drew a fib from this low to the recent high because it was a recent impulsive high and a break of structure. So I just decided, okay, well, if price comes back down to this gold zone, which just so happened to be a perfect retest of the triangle, then I'll go ahead and I'll enter there, right? So that was literally my plan. So we got in, I put my target level, I put a pending order, actually, is what I did, and I left. But I put a pending order there to enter. I put it at 45 pips. put my stop loss to make it a 3-to-1. Put it right around there at 15 pips. And then you put the order and then you left. So that trade, as soon as it came back down, it activated right there. And then that went straight to take profits immediately after, not immediately after we got in it, but it went directly to the profit levels that we set out without it going into drawdown or going into negatives at all. So that was a very good first trade of the week that we called out. After that, I got sick, unfortunately, so I didn't trade Tuesday, Wednesday, or Thursday. I just wasn't doing anything really those days, so this was the only trade that I actually did send out. But, let me go back and find it. So that was over here. This was the first trade. That was Monday. After that, the market continued. It didn't go as far as I thought it was going to go, though. It went up maybe like 50 pips. And then as soon as it hit that 50 pip target, it started reversing back down. So on a more high time frame, if we were to go look at the hour, this was back here. If we were to look at the hour, this kind of could just look like a fake out. Not a major slow fake out, but it was a fake out to bait people into buying into that trade. A lot of people bought into that trade, I'm sure, too. And again, whenever I say that, I'm not referring to like us doing it. Yes, we bought the trade too, but more so I'm talking about macro investors, huge, and the big people that actually move the market, where they were probably buying a lot into this pair, into this trade, the same way that we were. But then other bigger people probably started pushing the market back down and then closed all those orders out. So this, in all actuality, was a bearish continuation pattern, right? It was a bearish triangle pattern, but it did have a fake out to the upside and then continue back down to where it was originally intending to go, right? Which is where it ended. Where did price end? If we look right here, or let me move my, if we look right here and we look to the right of the screen, right, that is right near 2750, which is, as we all know, a major whole number zone. So if we want to write that down, not write that down, but if we want to notate that on here, right, we'll put that right here. I don't know why it's black. Right, and then we'll line that up with 2750, which is a quarter level, and that's exactly where the market stopped earlier. Okay, so now coming into today, which was NFP, right? NFP, the report today was actually pretty good. So job data was good, meaning that a lot more jobs were added, not this month, but in, so if it says May, so in April. I believe it's either measured for April or it might have been for March. I'm not sure if this was March's data or April's data, but either way, the previous months had a large increase in job flow, meaning a lot more people got jobs in the past month. It was expected that there was going to be an increase of around 130,000 jobs, but in all actuality, there was 177,000 new jobs added, right? Or people that are on payroll, pretty much is what that is. Not an increase in jobs specifically, but people that are on payroll. Which that doesn't even sound like a lot, but that's just how the numbers are measured for whatever reason. So taking that back into consideration, right? Today's job data and NFP data was good. I had absolutely no idea what to expect for today's trade though. So I kind of just guessed, again, same thing in the sense where I knew that we were at a major whole number and that we had already started pushing up from that, but I didn't, look, this was more, let me put it back to where it was. So this was the second entry. So, and let me go back to the 5-minute time frame. Yeah, but that way I can just moving a little bit fast, I guess. if any of you guys watching this now or later have questions about why we took this trade, very simply to just end that and move on from there. It was a triangle pattern associated with a break and retest associated with the fib structure. And then if we want to also look at things, it could be considered that we're breaking past the 3750 whole number area, which is another good confirmation. So there was just a few different confirmations that we took, but it was a simple trade setup, and we were able to get 45 pips on it and really not go into any drawdown at all on that one setup. So it was a good trade. Okay, now going back to today, when we first got back into the market, right, where were we? We were right here. So I don't want to pull up Discord because I don't want to cause the stream to lag or anything, but what I had sent out literally was this. All I did this morning is I drew a fib from here to here, but I didn't follow my own rules on this trade. I got a little panicked because I wanted to be in on the entry before the news release dropped, right? So for those of you guys that don't know, when NFP happens, there is usually a lot of market volatility, and it gives traders the opportunity to make a lot of money trading that news report, right? So I was wanting to get in on an entry before the news report dropped, right? Which caused me to not rush myself, but it caused me to not wait for the setup and instead trying to force the setup to be there when it wasn't really ready to be there yet. Okay, so what was the setup? In this scenario, why did I draw a fib here? Why did I think it was appropriate to draw a fib here? Okay, a few reasons, right? Reason number one, okay, if we're looking here, high, low, high, low, high, higher low, higher high, higher low, higher high, higher low. This high now broke this structure. Same exact thing that I was just talking about. This high just now broke this structure, meaning that it is now a new high. It's not an aggressive or an impulsive move, but we have a change of character now. Now, since we have that change of character, it makes it appropriate to draw a new fib structure. So in this scenario, since I drew a fib from here to here, what this means is one of two things. Either one, this orange zone, and this is what my analysis was, is I was expecting this orange zone, retracement zone 1, to be like the liquidity grab, and then that we were going to push higher with the NFP report, because I expected the NFP report to be bad because last month's report was bad. So, and everything else has been going on, everything else going on has been volatile for the dollar, so I just expected it to be bad, okay, which was, again, premature on my end. So what ended up happening, though, what I should have done is understanding that I didn't have a clear bias of what I wanted the news to be, right? I shouldn't have entered the trade before, period, okay? But what I could have looked at a little bit closer was this right here, right? That we had a high, and then we had a low, and then we had a lower high, okay? We didn't make a new high. We made a lower high, right? So that lower high is showing us what? It's showing us that, and now if we take a closer look at this too, what number is this, right? This is 3,500, which is a major whole number zone. So as soon as price hit this major whole number zone, it started to come back down, right? And it came back down to the orange zone, which is okay, nice, that's good, right? But a sign that we overlooked is, yes, it hit the orange zone, but we failed to make a new high. If we made a new high, then it would be okay, well, we're probably going to continue going higher. But since we didn't, and we made a lower high, we're probably going to make a lower low, right? And if the orange zone isn't going to hold valid, what's the next best zone to wait for, right? The best one is the gold zone. So I should have waited to enter on the gold zone. Okay, so just using raw technical analysis. We could have added in some other things. I did have some other things I was looking at, right? This said weak high. I saw that we hit that demand zone already. I was like, okay, that's solid. You know, I'll take that. Same thing, we're still trading above the Bollinger Bands. We're still trading above the EMA line, solid. You know, I'll take that as a confirmation as well. But the thing that I don't think I looked at my oscillators. Yeah, if I was looking at the oscillators, I could have seen divergence right here. I could have seen, okay, this says that we're going up. This says that we're going down. Right? So I could have taken a little bit closer attention to that and probably wouldn't maybe have entered. But either way, what ended up happening, right, let's move on from that and let's go into the actual trade. So I saw this. I didn't want to make you guys miss a trade, and I didn't want to miss the trade myself. So what I ended up doing is we got in like right here. Let's just say, for example. And then same thing, I targeted 45 pips. I think I did more than that, just expecting it to go crazy. And I put a 15 pip stop loss. I think I did a 4-1. I think I targeted, like right here is where I targeted. Okay, so I was expecting the market to go, when NFP, the news release dropped, it was going to go up. Right, that's my analysis, right? And it was going to break through the whole number zone. Maybe we'll retest the whole number zone, but we were going to ride the break of the whole number zone. We were going to ride this fib. We were going to ride the negative news reports. We were going to ride the week high. We were going to, you know, ride the EMA wave. So I thought it was a decent setup, okay? But I overlooked a few key principal aspects about it, okay? So as soon as I entered the trade, what happened? As soon as I entered the trade, I got stopped out, right? And then what ended up happening right after that is I sent a message right after that in the Discord. I said, as soon as I got stopped out, I said the market interestingly went straight to the gold zone. It went straight to the gold zone, and it's a good opportunity to get in, right? But I didn't get in immediately. So I went down even to, and this is me just looking at the computer at this point. So I was looking at the computer, and then I noticed, so we went up. Let me go back a little bit again. Let me go back to right here. So as soon as NFP dropped, like I said, my entry was like right here. I got stopped out immediately. Got stopped out. I waited like 5 minutes. Each one of these is a 5-minute candle. So yeah, like 11, not 11. At like 9-ish or something like that, I got back in. 9:05, I would say, something like that. But then it came up. I missed that entry. And then it came back down a little bit close to the gold zone, so I ended up getting in there, right? And then after that, the market went, and I wasn't that greedy. I only ended up walking away with like 40 pips on this one. But saying to put a 15 pips, take profit. Stop loss, and put a 40 pip, take profit. And then we were able to get back in on that entry. And then it went a little bit farther. But then I didn't stay in after this. I was going to hold it over the weekend. But the reason why I only got the 40 pips instead of where I was at with the 50, and because I sent a message out saying I might hold it through the weekend, but I didn't hold it through the weekend because I had this pattern here, and then it kept making lower lows. So then at that point, I just wasn't confident in the setup anymore, and it's a good thing I wasn't, because immediately after that, it continued to tank down even lower. And now, so that was the trade. So that trade was over. And then now, current market price, let's close this out. Current market price is trading back at, again, near, this fib is still technically valid in all actuality. It could be considered valid still, but I would just have to wait and see. I'm not in an entry right now. On Sunday, I'm probably not going to take a trade on Sunday, and I'm probably just going to wait till Monday to see what reaction is going to happen with this. A number of things could happen, right? This could be, if we want to just be simple, a double bottom, you know, at this, you know, 78, 81 zone, right? We could say that this is a liquidity zone right here. We could say a bunch of things. If we want to look at a higher time frame, 15-minute, right? We could, you know, this, look, that looks fucking crazy, so we're not going to look at that. Yeah, no demand zone. We're in a demand zone there, it says. But, no. It says that's a weak low on the 15-minute, on the hour. Same thing, it says that's a weak low on the hour. Higher time frame still has a bullish narrative, in my opinion. This kind of looks like I saw this the other day, actually. This kind of looks like a Head and Shoulders right here. If you guys can see that. I know that looks a little bit crazy. But it does kind of look like a little bit of a Head and Shoulders, which in this scenario, actually, now I can show you guys this scenario. Let's say that was a Head and Shoulders. Here's the crown. Here's the neckline. That's 250 pips, right? So that means if this was a real Head and Shoulders and it was to break the neckline to the downside, that means that this would drop 250 pips, right? And, it could, because if we look at 250 pips, where is that right nearby? That's right near this demand area, that where this influx of, bullish pressure came in right here. That is exactly near where the end of the Head and Shoulder structure looks like where it would be. So will price come down to here? Maybe, break, retest this area, and then continue higher? That's something that could happen depending on what happens again with, how the tariffs are going to affect us, if the Fed is going to cut interest rates or not. The Fed, Trump today, I was just reading about it, and I was talking about it. But that Trump was, he's still urging the Fed to cut interest rates because, especially today, because of the job data. Since the job data was positive, he's wanting the Fed to cut interest rates even more. So if they are to cut rates, that's something that we're just going to have to find out. I think personally that if they were to cut interest rates, that would make the value of the dollar go down a little bit. Reason being because it's worth less now. It's harder. It's easier to get access to the dollar. So since it's easier to get access to the dollar, it kind of, it should make the dollar a little bit less valuable. And that's something that is still to be determined, and that I still am still learning that on my own, because this is stuff that I've never really encountered in trading. So I try, at this current point, for this upcoming week, I'm going to try not to pay too much attention to the monetary policy, because I don't think much is going to change this week, right? Specifically, or the next 1 to 2 weeks. I don't think this month actually is going to be like a super detrimental month, necessarily speaking. I think that we will have some news reports that, give us some movement, yes, but potentially speaking, we maybe could continue to go down up to this area and then maybe make new highs. Just for the time being, again, because everything that Trump is doing is an attempt to bring value to the dollar. So we don't want to bet against the dollar too much, unless we are kind of saying that we're not wanting the president to fail, but that we're expecting the president to fail. And if the president is expected to fail, then that means that Euro USD and the Euro and all these other pairs are going to continue to gain more value. So it kind of just depends, you know what I mean? So to not look too macro and to look a little bit more, because sometimes this is wrong right now, so right now on the daily time frame and on the 8-hour time frame, this is saying that we have a weak high, right? But all I'm saying is we should be aware that there is a potential. It's not a nice looking Head and Shoulders, but it kind of does look like a Head and Shoulders pattern, I can't lie. Or are we going to have another one of these situations where, it looks like, same thing, we could be having a little bit of a bearish, pattern forming, and then it just fucking explodes even higher. Could that happen? It could. So that's macro. So for right now, for this week and for this upcoming week, right, what we can do for the weekend is just back test and look at the trades that you took yourself. And then for the upcoming week, what we can expect. Really, if this was like a new chart and I was just looking at this, I would draw it the same way I have it set up already. I would draw it from here to here. Let me delete these other ones. Okay, let me delete those right there. Boom. This looks like a good setup right here. I can't lie to you. Right, if we were to look at this here from this low to this high, right now we are in the premium discount zone. This could be the best entry you could possibly get, honestly, for this kind of trade, right? So it really depends on what happens with this level. So what I could say where we could leave it off here is, let's say we were to get in here come Monday or Sunday open, we could target, way up here, maybe have a 75 pip stop loss, And then same thing. We don't even need to be that aggressive. Still have a 15 pip take profit. Make this a nice 5-to-1 entry. 5-to-1 entry right there. Boom. And if it gets stopped out here, if we were to go below this 70, below this 81 zone, it honestly means that we're probably, due to continue going lower. Meaning that you could probably confidently, at that point, sell and do the exact same thing. Let's say you lose 15 pips, then now target 45. And now you make your loss back. So I think we could leave it there and say this will be the setup. I would primarily, and I would prefer for this entry, I think that it makes a little bit more sense. But especially now that we showed that there is interest in price going up higher still. I think that this is just kind of like, since it's Friday, since NFP data was still good, okay, let's push the price down a little bit lower. But come this entire new week, I think it's possible for us to overall, trade back and maybe make a new high and break above 3,500 again. I think it would be normal for us to trade in between 3,750. I think it would be normal for us to trade around this 4,000 area. I think 4,000 is reasonable for a trading price between EU right now, because of just, again, the instability with what's going on in the US, and also the Eurozone hasn't been the hottest lately in regards to they just cut interest rates as well, right? So we're going to look at the Eurozone, because we only look at the dollar. So we're going to look at the Euro, because we're trading Euro USD. That's something to take into consideration, is that the Euro cut their interest rates, I believe, like 3 weeks ago. And then coincidentally speaking, 2 to 3 weeks ago is exactly when all of the Euro strength that it gained started losing, right? Why? Because now the Euro isn't as valuable. But if we were to go look at a pair like USD CHF, which is a pair that I really do want to consider trading a lot more again, looks the exact same actually. Not the exact same, but a little bit more. Right, so if we look here, it's a completely different chart at that point. You know what I mean? This is 8 hour, obviously. Let's go to the 8 hour on here. So it's not a completely different chart. Never mind. What was I just trying to say about USD CHF then? Is that USD CHF is a little bit easier, I guess, because so typically the way that it goes is, again, I talk about this a lot in the course, where the Euro isn't considered a safe haven currency. Right, the Japanese yen is considered a safe haven currency. The Swiss franc is considered a safe haven currency. So when Euro is having bad news, CHF is gonna do good. When the dollar is having bad news, CHF is gonna do good. Okay, and vice versa. Right. So the reason why I'm talking about this is because if we're not able to really get a good opportunity here on EU for whatever reason, I might start looking at USD CHF entries again, where if this gets a little bit wonky, because, oh, well, yes, the dollar is losing strength, but also Euro is losing strength. Okay, well, if that's the case and there's no clear power, let's just go to USD CHF, where if the US dollar is losing strength, that typically always means, not always, but typically always means that the franc is going to be gaining value because it's considered a safe haven currency. Okay, so let's just say, for example, let's just say EU is consolidating, even though USD had bad news, right? The way that USD CHF would look is more like this, because the US dollar had bad news. It might still be consolidating a bit, yes, but it would be in a downwards direction. Where versus, let's just say now, the dollar had good news, but Euro is still also valued more, whatever. You'd still probably get some consolidation. But if the US dollar had good news, then it would be a little bit more in one direction, if that makes sense. That's not saying in any way, shape, or form that USD CHF is better or easier to trade. The reason why I prioritize trading EU, and don't get me wrong, I was trading EU and USD CHF for a while. For like a year. I was trading the both simultaneously, but I don't even really have a main reason for you as to why I dropped USD CHF. Yes, EU does have more liquidity, but I don't know. You know what I mean? So maybe we'll start trading USD CHF again, dude, because there really isn't a reason not to trade USD CHF. And talking about the attractiveness as an instrument as a whole, where again you get more per pip, and it sometimes has cleaner movements. The downside though is you get more. USD CHF might not be moving that much. Where news or not, Euro USD is gonna move 50 pips a day minimum. 100 pips a day minimum. USD CHF, let's say Euro USD move 100 pips a day, USD CHF will move 75 pips a day on a normal day, if that makes sense. Versus where on a news, they both can move 200 pips a day during the news. So on a normal day, USD CHF is a little less volatile, and some traders prefer that. I like getting some moves though, so it's something that we could look into though as traders, and it's something that you guys might start seeing. You might have a little Euro USD chat and a USD CHF chat, right? Potentially, but just depends on the time and day. Honestly, is all I'm saying. But so that's pretty much all I got, guys. I don't know if anyone has any questions, any comments, any concerns, but let me see. Let me read the chat really quick. I saw someone said something. No, the chat's not even popping up. To be serious. Oh, here it is. Okay. They said, man, now it's popping. Now it's not popping up again, dude. Someone just had a question. It said, like, it's popping up and then it's going away, dude. It said, like, do you think that there's going to be... Okay. LPB said, do you think there will be a near-term aggressive boning of this asset? LPB, if you are on the chat still, bro, I would love to know what you mean by that. Do you think there will be a near-term aggressive boning of this asset? I don't know if you mean if boning is a typo, bro, or if boning means something special to you, but I'm unfamiliar with that term. So I'll give you a second to if you are watching this still, you can elaborate on your question and I will 100% answer that. And while you're taking time to write down your question, I'm going to give everyone else the opportunity as well. Does what I went over make sense, right? Do you guys have questions about what any of the trades that I went over? Took 3 trades this week. One was a winner. First trade was a winner. Second trade was a loser. Third trade was a winner. First trade was around 45 pips. Second trade was a $15, or not $15, 15 pip loss. And the third trade was around a 40 pip win. So in total, we caught around 40 plus 45 minus 15, around 75 pips, more or less, if I, all in all. But which is still pretty good, again, for only 2 trades. 2 days trading. 2 days trading, I should say. Boning means selling credit spreads on SPX. To be real with you, bro, I have absolutely no idea. Someone who maybe could help you with that answer is Cam. Cam is someone that is a G at trading. He's been with us now for a while, but I don't trade SPX, bro, so I'm not even gonna lie to you and sound like, oh, I know what I'm talking about when it comes to that. I trade Forex, bro, and selling credit spreads, that's not something that I come across in the Forex world, and it's not something that comes across when you're trading CFDs. When you're trading CFDs or spread betting, currency pairs, you don't come into that scenario. If I knew, like, a way that translated into, like, Forex trading, maybe I could answer that a little bit better. But, I guess I will say, so let me read it like that. Do you think there will be near-term aggressive selling credit spreads on SPX? So, okay, so if that means like Nah, I'm not even gonna attempt. Because in regards to stock market stuff, dude, again, I'm not even gonna attempt to try to act like I know what's going on there in that world. That's not my world. In regards to overall economy, again, market stimulation is going to continue to increase, right? If stock prices are going to continue to go down or not, that's a little bit of a different question. That's something that's a little, we could do some research on, because the way that that works is where if the dollar, it depends, bro. It depends if we're talking about news releases or overall growth. Again, macro or daily, right? Because if there's news releases that are saying the dollar is going to be getting, we're going to cut interest rates on the dollar, right? Interest rates getting cut on the dollar, in theory, would make the price of stocks go up, which would make SPX go up, right? Why is it going to go up? Because it makes money more accessible, meaning that banks can go take out loans now, private equity firms can take out loans now, people can take out loans and get credit to go buy stock, to go buy companies, and that is going to make the price of those companies go up, right? Meaning the stock will go up. Where vice versa, where if people are saying, no, we're going to hold interest rates or we're going to raise interest rates, raising interest rates usually brings down the value of stocks, because now it makes the dollar a more attractive investment and more safe and more stable. That's how I understand it, at least. So I hope that makes sense. I know that's not like the most ideal answer to your question, and I apologize, bro. But that's to my knowledge on that sense. But if you have any other questions, or if anyone else has any other questions about, again, anything else, if it's my trades, your trades, anything about the economy, anything about, general Forex knowledge, in general, what something means, or if you, any question at all, take a second, write it in the chat, and I will take my time to answer that for you guys. But, and if you want LPP too, bro, if you want to, dude, go ahead, send me a message. My number is, 561-377-2122. And if you're not in the US, you can message me on Instagram, and my Instagram is @OllieCashflow. And we can get on a call, bro. I would love to help you. I don't think you're a student, so I would love to help you, however I'm able to. But, yeah, because you're saying your favorite Forex play is the Mongolian Turkic, against the dollar. That's an extremely exotic instrument, so I would love to hear your experience trading that. I've never traded that. I only trade major pairs. But yeah, if no one else has any other questions, feel free to reach out to me on social media @OllieCashflow. I'm doing a lot of stuff. I don't want to go too far into it on this call because, again, the viewer count isn't too high. But we are making a lot of updates inside of the material, inside of the ecosystem for the course, inside of the ecosystem for the community, and inside of the ecosystem overall for you guys as students. It's going to be a completely different experience, and I'm super excited to actually have that release. It'll probably be, I know I've said this a lot of times, but you're going to start seeing updates, probably weekly updates I'm going to start sending out, and I'm going to expect it to be done. September 1st is when we're planning to launch. So, not September 1st. April, May, what month are we in? June 1st. I don't know why I said September, but June 1st, right? June 1st is when we're planning to launch this updated version. So this is going to be officially Cashflow 3.0, right? So Cashflow 1.0 was our original system where we first built the first ugly ass course, and we were just teaching just binary options. And Cashflow 2.0 was the updated ecosystem that a lot of you guys are in now. And then Cashflow 3.0 is that all of you guys are in now. I don't know why I said some of you. Everyone that was in 1.0 is in 2.0. But now 2.0 to 3.0, it's going to be completely different and completely better. Again, even more so. I'm updating a lot of the videos that are majority done. And it's going to be a lot better. So I'm excited for you guys to see that. But I'll keep you guys updated in regards to that. I'm going to be sending you guys individual one-on-one messages, one-on-one emails. I'm going to do my best to call every single student as well in the next month. So you guys will be hearing from me too. I know I've been a little bit ghost lately in regards to one-on-one communication, but that's just because I'm working on making everything even better than what it already is for you guys. So that's going to be coming soon. In regards to updates, that's pretty much all I want to say right now. Everything else I'll kind of, show rather than tell. And next week we'll be back on Thursday. Thursday, as always, we'll go over the market, go over everything that we want to go over our trades. And if you are a Cashflow member and you are in the Discord group, it does look a lot different. Everything is gone. So that's why. That's why I was going to say that. So just pay attention to the team chat. That's where I'm sending out my trades. That's where you guys can ask questions, and that is where everything is going on right now. So keep your eyes peeled on there. And if you guys have any questions, comments, or concerns, you guys know where to reach me at Ollie Cashflow, or message me in Discord, or text me 561-377-2122. Right? But with that, guys, I'm going to go ahead and end tonight's call. LPB, I would love to hear from you, bro. And any other, viewer that is not a Cashflow student, whether you're watching this live or later, I would love to hear from you too. So reach out to me and we'll connect and we'll see how we can make some money together and how I can help you become a better and more profitable Forex trader. Right? So with that, guys, I appreciate you all so much. Thank you for giving me your time tonight. And I hope you all learned some value. I hope you all got some value. And I will see you all next week on CashflowTV. Thursday night at 8 p.m. And if you guys can't do invite a friend. That way we get some more people on these calls, right? But I'll end it there. Invite a friend next week. Bring a buddy. And I'll see you all next week, 8 p.m. CashflowTV on YouTube. Peace.